you need to stop paying for indicators that you could be building for free with Claude. A few years ago, unless you had a background in coding or access to a developer, it was extremely hard for you to make your own indicators. But now, with the recent advancements in LLMs, it has never been easier to do so yourself. That is exactly what I'm going to cover in today's video. In case you don't know me, my name is Morin. I started trading in 2023, and it took me 1.5 years to go from a complete newbie to consistently profitable. While it wasn't the indicators themselves that led to my profitability, they did play a key role in how I identify my setups. It was having a very process-driven approach trading as well as a very strict risk management that led to my success in such a short period of time. But that's enough about me. Let's actually get into the good stuff. The first thing that we're going to do before we start coding is prepping Claude. Well, actually before Claude starts coding. Here are the 4 things that I want you to paste into a new Claude chat to help smoothen the process of building your very first indicators. This prompt will be available in the description below, as well as any of the indicators that we build today. One thing to mention is that sometimes when Claude gives you the coded indicator and you paste it into TradingView, there might be some errors. But if any of that happens in the video, it is nothing to be concerned about. All you have to do is take a screenshot of the code and paste it into Claude. But I'll show you that as well. Let's get into the first indicator that we're going to build. This is a volume-based indicator. While volume measures the total amount of shares or contracts traded in a specific time period, what we're going to build is a relative volume indicator. Relative volume compares the current traded volume to the previous average traded volume. When it comes to building this indicator, it's pretty straightforward. So as long as you have an idea of what you want to build, all you have to do is explain that to Claude. I'm simply going to tell it, build a relative volume indicator. This is going to be the first iteration. What you'll notice is there are still some changes that we can do to make it even more useful to us and our system. Once it gives you the code, you simply head over to the top right, click copy, and then we're going to go to TradingView now. Once you're on TradingView, if you head over to the bottom right, you will see an icon, and over it, there'll be the word Pine. Once you click on it, it will bring you to PineScript. So this is where you will paste all of the code that Claude has created. What I simply do is go over to the 4th line, I delete everything to where it says version 6. Once deleted, we simply paste in the code. Then we click add to chart, and now you have your indicator. Now, why this relative volume is so important is what we'll go over now. So what you'll see on the indicator is every time there is a very big red spike, that is your spike in relative volume, which also aligns on the price chart with whenever we've had a very big sell-off. This helps me anticipate the formation of new ranges. So if we have a look at the first example, when there was a lot of aggressive selling and a relative volume, this was when we bottomed out at 60K and then started ranging between 79K and 60K. And guess what? When price then revisited that 60K level, what did we have? Another aggressive spike in relative volume. So there was a lot of aggressive selling taking place, yet price was unable to push lower. So it was getting absorbed. But now let's say that I want to differentiate the buying selling with the volume selling to make it a bit clearer. Well, let me just ask Claude. I simply ask it, can you distinguish the buying volume from the selling volume? And then it'll code up another variation of that indicator that I can simply paste again into TradingView. We just do the same thing. We delete the current code, paste in the new one, and then we click at the top here where it says update on chart, and it will do it automatically. Now, when we minimize it, you can see how at the top we have all of the buying volume and at the bottom we have all of the selling volume. While it is nice to have it at the bottom of the chart, what if I want to have it on the actual candles themselves? So that all I have to do is look at the candlestick and clearly see which candles had the buying volume and which candles had the selling volume. I simply paste that request into Claude and do the same thing again. And here is our final iteration of this indicator. So now when you're looking at the chart, let me simply mark out my range high, let me mark out my range low. And now we can see that this is just on the 12-hour chart, but usually I like to kind of go down to the 4-hour. And we can see how when price is trading into the range highs and we accept back below the range high, notice how we have a lot of selling volume coming in. So when you have this aggressive selling volume and price accepts back into the range, that for me gives me enough confluence to maintain my short exposure and look for a rotation lower. And then when we go to the bottom of the range at 60K, let's have a look. We can see that we have this very big red candle. So there's a lot of selling volume coming in into the 60K low, but price is unable to push lower and actually holds above that level. So that's your sign that those sellers are exhausted and that we could see a continued range-bound environment. So that is how you can create your different iterations of those indicators. And it's quite simple. You see, I'm simply telling Claude specifically what I want, and it will give me those outputs. Plus, with any of these indicators, what you'll see is if you just click on the indicator and go to the settings, you can customize the lockback period, the highlighted threshold from the low and the high. So with the look back period, it simply means how far back are you going when you're comparing the average spikes in volume. Then with the style, if you want to change up the colors, you can see 1.5x or 2x the volume. So in 2x, I usually like to make it a lot darker so I can see like if there's lots of selling getting absorbed. And for the buy one, you do the same thing, make it a bit darker when it's 2x compared to 1.5x. Now on this own, it's good, but I wouldn't call it a strategy, right? Because I'm simply looking at the volume. An important part of having a trading playbook is being able to identify your trade location. And one of my favorite indicators that I built for that is what I would call my liquidity sweep indicator. So if I pull it up, it's called my swing high and swing low. Let me just make it a bit clearer to see. So we'll just change it to a solid line. And now on the chart, what you see is the liquidity sweep indicator where it's showing me the swing highs and swing lows, as well as the relative volume. So both of these together give me more context when it comes to taking my trades. So for example, when we are in a downtrend or a range and price approaches the range high, what I'm looking for are short trades. So in this instance, we have a key swing high. I drag the line across and we have price taking out that level. So what we'll do is let's just use the replay tool, head down to the 1 hour chart. And what I'm looking for is lots of aggressive buying into that level, but those buyers are not being rewarded, meaning they're being absorbed by a passive seller. So as you can see, as price is aggressively traded into that swing high, you will see this very aggressive green candle. And then price is not able to push higher. So it's getting absorbed. We have that aggressive selling coming in when price steps back below the swing high. And those are those type of like A-star setups that really help me grow my account. But let's say you only have the basic trading view plan. If that's the case, then you're only limited to a certain amount of indicators. And if you want to test out and build your own indicators, then that might be a problem and you might have to upgrade your subscription. Well, one way to avoid doing that is by simply merging two indicators together. Now, of course, you can't do this with every indicator, but for example, in my system, looking at the volume, looking at the liquidity sweeps for trade location plays a key role and they work confluent to each other. So what I can do is simply merge them together. And the best way to do that is to copy the source code, which is the Pine script, and paste it into Claude and ask it to simply merge them together. So let's do that. We head over to the first indicator and on the right, you will see source code. So once that pulls up, it will load the code for the indicator. Now I simply copy it. We head back to Claude and then we will paste that code. Now let's do the same thing for the relative volume. Again, hover over the indicator, click on source code, and there we go, the same code. Take it and we copy it up to the version 6 to be specific. Paste it again. So we'll simply type at the bottom, merge both indicators into one. Now, once we have the finished code with both indicators, we simply click on the top. We're going to say create a new indicator, delete up into the fourth line, paste in the new code, and add it to the chart. So let me delete the previous indicators on the chart. That way you can see how we now have both indicators together, where we have the swing failures and the high volume bars. Now again, it's going to show you a lot of swing highs and a lot of swing lows because you're not meant to trade all of them. You know, the way that I trade is really marking out my ranges. For example, here on the 4 hour, I would mark out my range high. I would then mark out my range low. And when price is at the range highs, I'm looking for those shorts. When price is at the range lows, I'm looking for those longs. And the same thing, when we're trading down into those range lows, any spikes into a key swing high is where I'm also looking to take my mean reversion trades. So on their own, you know, these indicators are not strategies. But the number one mistake that new traders make is actually thinking that these indicators on their own are strategies. You know, your trading strategy is built on a playbook, right? And a playbook defines my trade location, right? Where do I want to take a trade from? My trade execution, how do I want to enter? Where do I place my stop loss? How do I manage the trade? And then where do I take profit? All of these things are what is defined as your playbook. So for me, I have multiple playbooks, and all of them I have my own PDF where I write down step by step, why am I doing this? Why am I doing that? I can clearly explain all of the rules in them. So don't fall into the trap that thinking that these indicators that you're building or these indicators you're paying for are strategies themselves. All of the indicators that we covered today, as well as the starter prompt to help Claude smoothen the process of building those indicators, will be shared in the description below for free. Because you shouldn't be paying for indicators in 2026 when you have these LLMs that can build them for you. If you want to see more in-depth trade breakdown videos, then let me know in the comments below and I'll be happy to record something on that. Thank you all for watching the video. I hope you found some value, and don't forget to hit like and subscribe if you enjoyed. Take care.